What's good, everybody? Welcome to the closing beat. Happy day. Wow, I'm really low here. We're not going to sit today. Let's do it like this. Yeah, there you go. Hey, I'm Dustin Tibbetts, financial advisor here with Jazz Wealth, usually a little more put together than this. Is your financial advisor not paying attention to you? Do you have an account somewhere and that person is just not really interested in teaching or helping or anything? Let me give them a call and have them transfer over here to Jazz. I thought of that earlier today. I thought, that's my favorite part of the job, is actually transferring accounts away from people that just don't want to help. Not that they're bad people, but here we teach, we build and manage our own portfolios, so they're expense-free. There's no expenses in our different portfolios. You get to understand how we adjust them. Actually, this class this Thursday is going to be the most in-depth class I've ever done. I'm talking a great class. And I'm not overselling it. It's going to be a good one. So we do these for our customers. We just want to teach and help. Doesn't matter how big or small your account is. We'll work with you either way. So be up on alert for that. If you're one of our customers, email going out on Thursday for our class. All right, but you're here to see the markets today. You should be able to see the markets above. You should be able to see a chart off to your right that shows you kind of how the markets move throughout the day. There's a red dashed line that I point to every now and then. You can see it straight across. And you see how we went above and below that red dashed line? The red dashed line is yesterday's performance. So you can see the markets really didn't go too far above. They didn't go too far below. They were content to just chop sideways. We had some interesting news out of China overnight. China is something we're going to review on Thursday for our customers. The stock market and the economy completely disconnected, right? I don't know what they're doing over there. So stock market's on fire, in a bull market, doing better. Economy struggling a little bit. There's a lot of negative stuff going on over there. They came out overnight. The tax cuts, I told you last year that this would be the year that China puts in tax cuts for its citizens. They did it a lot earlier than I thought, but tax cuts and infrastructure spending announcement over there out of China. So that was helpful, but really there was nothing new to get our market to rally. And why won't our market rally here? Well, we like to look at charts here, not because we sort of believe in the magic of charts, but really just to give you an idea, visual representation of what the market does. How else are you supposed to know what the markets have done on a day-by-day or week-by-week basis? Well, this chart here is showing you that the S&P 500 is right at a ceiling. I've been pointing out this ceiling for some time now, and because there's no real great news, trade-wise, economic-wise, really nothing great to go on there. Earnings are okay. You got some hit and miss out there with what's left of earnings season. Earnings season's over, by the way, so there's really not much excitement there. And so investors are kind of saying, I see we're at a ceiling. I see that there is a reason for the markets to stop and chop around or pull back. Give me a reason to want to buy even more. Those of you that sold off in December and you hurried up and you raced back into the markets because you realized you were wrong, you've already bought. You've already jumped back in. Everyone who wanted to be a part of the market so far is in. Now we all need another reason to buy more, and we just don't have that reason right now. And so for that reason, you see that the markets today only were flat, right? 12 points on the Dow to the downside. Actually, it was positive just like 3 minutes before the close. Then went negative by 12 points. S&P down 3, Nasdaq down 1. The Nasdaq actually was the better performer because of FANG stocks. We'll cover those for sure. But I want to point out real quick that the Russell 2000 is your laggard. So that tends to be the leader if you go back and study markets, which ones start the moves higher or lower. The Russell 2000, right? A little bit weak there. And so that sort of stands out, right? Today, the worst performing area, it's stuck at the 200-day moving average. It has yet to be able to get above that. So very interesting to just kind of, let's keep an eye on that. We'll talk about that. Earnings tomorrow, you've got Dollar Tree, you've got Abercrombie and Fitch coming out tomorrow, and that's really about it. Casey's General Store, if you like that. BJ's Wholesale, if you're into that. But yeah, that's pretty much all I got. The market's looking for a reason to head higher or lower. CVS was the only stock today that hit new 52-week lows. I don't know if you like extended discounted stocks, but this one's sure starting to shape up that way. Notice the volume in the background, the volume picking up. That lets you know that people are giving up on the position little by little, which is leading to an accelerated sell-off. Basically, you have people in here saying, just sell at whatever price. I don't care. I don't want to be a part of it anymore. And that leads to this extended decline. That was your only 52-week low here in the S&P 500 today. You had 9 make new 52-week highs. Yum Brands was one of them. Just a choppy but consistent uptrend to the upside there. All right, sector-wise, retail, that sticks out as a sector for me today. Small positive day. One of the better performers in the S&P 500, or sector-wise, one of the better performers. Still chopping around in a very inconsistent uptrend, one that would drive you crazy if you were trading in the ultra short term. So retail was there. You had earnings from Target. You had earnings from Kohl's. We'll cover that in a second. ICF, I'll use to kind of cover REITs. REITs are headed back to highs. This is the little sector that just won't pull back, right? So stuck at highs here, won't pull back very much at all. So if you're following REITs, those continue to be a good performer. Today, one of the better areas was communication services. XLC, if you can't see it on the screen there, XLC is the ETF that we use to just kind of track that. Just a fun way to look at communication services. Headed back towards highs. If you look at the chart here, really strong in the sense where all those tech names that are underneath it, we'll cover FANG in just a second, but really sort of hinting at this possibly being the next leader to the upside there. Today was an interesting day to watch if you pay attention to that. Oh, financials, before we move on. Financials holding back here at the 200-day moving average. Still about a 20% gain since hitting those lows. So you can kind of understand the financials wanting to take a break. And I'll mention the same thing. Give me a catalyst. Give me a reason. Catalyst would be the drinking word of the day. If you were watching any financial media channels, catalyst was the drinking word. It was probably said 1,000 times today. But I agree. Give me a reason to want to buy more of the market. Give me a reason to want to dive in head first for some of these individual sectors, or let me see them pull back. That would be a reason for people to dive in, I think, as well. So financials a little bit lower today. And if you like the regionals, I know a lot of people look at the regionals, also a little pullback there. All right, let's move on to individual stocks. You got Target today breaking out of a little range here. So it loses a point from a technical perspective as far as a breakout goes, but now back into this gapping area. So the old saying is stocks like to fill their gaps and always will fill their gaps, meaning when a stock gaps higher or lower, it eventually comes back and sort of trades in that space that it skipped before. That's a bad way to say it. But anyways, so you got this large gap lower here, and the stock basically going back into that range. 200-day moving average overhead. The stock was the third best performer in the S&P 500 today. Earnings better than expected, revenue better than expected, sales better than expected by a decent amount. We're expecting 5.1%. Sales came in at 5.3. That's good for Target. I mean, that's no small tick higher in sales. Company was very positive, guiding forward. Forward guidance much better than Wall Street had expected. Really just kind of a glowing day for the stock. The only one that beats that in the retail space is Kohl's. They were your best performing stock in the S&P 500 today. Earnings better than expected. They actually beat by 6 cents. Decent beat there. Revenue higher than expected. Same store sales higher than expected. So you've got this rally now headed back into the 200-day moving average, but you also have price resistance as well. So people that don't use the moving averages are still going to see the prior area where it struggled to move higher. Today was an awesome day to make those traders believe that it's going to break out above that. Not to mention the volume being way above average down here. It just shows that people jumped the gun a little bit, meaning they weren't going to wait for it to break above it. They wanted in before that. So if you're trying to kind of gauge the emotional sentiment of other traders there, you get a feel for what's going on. Okay, Salesforce.com ultimately only pulled back about 1%. We talked about this yesterday. They reported earnings better than expected, easily beat expectations, revenue better than expected. What the CEO was trying to do and what the company was trying to do was scale back a little bit. So they guided for this quarter, first quarter 2019. They essentially said, not as good as you guys are expecting. They're trying to slow down the ship. You know when the Fed starts saying, well, maybe the economy's growing a little too fast. Maybe we've been a little too quick to raise rates, or hey, maybe we need to raise rates again. It's called jawboning, like the sort of geeky, hey, what they teach you in school so you sound fancy in front of your friends. It's called jawboning, so that you can start to or moral suasion. There's the fancy way to say it. So you can start getting people to think that things are not going to be as great. You don't want to scare them. You just want them to think they're not going to be as great. That's what the CEO did on Salesforce today. The dude's awesome. I mean, these are the types of people you want running your companies. T-Mobile CEO and the CRM CEO, or Salesforce, these are cool people. I don't know. Some people you want to cheer for. Anyways, so dialing back expectations, the stock started to pull back. If that continued, you'd only find people interested in buying this. This is one of the top relative strength stocks over the last year, meaning when the markets find moments that it sells off, this stock holds up better. When the market performs and starts to rally again, this stock tends to perform better. It's not cheap, but there you go. So there's a little bit of an overview on Salesforce. Moving on, limited brands. The stock ultimately was only higher by 0.5% today. There's a hedge fund in New York that's saying, hey, we got an idea. Why don't you split Bath & Body Works from Victoria's Secret? Keep Victoria's Secret under limited brands. You can even call it Victoria's Secret for all they care. But go ahead and have the Bath & Body Works brand as its own separate company. Gap is doing this with some of their brands. It's becoming a little bit more popular. Times are good. People can split off stocks. So nothing's happened yet, but basically the hedge fund out of New York, I forget the name of the hedge fund. They just said, hey, we're going to put this in a formal request to the CEO and see what we can do to pressure them to split the company in two. We'll see. General Electric down about almost 5% on the day, and it was pretty much steady as she goes to start the day. However, there was some comments out of the CEO that they would have negative free cash flow for 2019. That's after expenses, operating expenses, investments, things like that. Negative free cash flow. Not good, right? So people are already pricing in that the worst is behind us, and now the CEO's telling you, oh, maybe not so good as far as cash flow goes. We're going to be negative. To put it in perspective, last year they had $4.5 billion in free cash flow. So the stock selling off by 5% today, you can kind of understand why, right? If we're going from having some free cash, imagine you're in your personal life. You had a good year, you had some cash in the bank. This year, it's March, and you're already projecting that you're going to end with no available cash in your bank. What are you going to do? Right? So we need more action. That's what investors are starting to pick on GE again for. So anyways, what else do we have here? Ross Stores down a little bit here after hours. They reported earnings better than expected. Earnings came in, do I have it here? $1.20 versus $1.13. Revenue better than expected. They guided light going forward. They're also trying to dial back. The only reason I say that, I haven't read through all this yet. The only reason I say that they're trying to dial back as well, look at the comments the CEO made. I'm trying to read and talk at the same time. Anytime they bring up politics, uncertain political future, those are little ways where they say, we want you to be worried, but we don't want you to blame us. We want you to just sort of expect lower prices in our stock, expect a little underperformance in our company, but we don't want you to think it's us. So unless I'm reading it wrong, that's another great example where they're just trying to lower your expectations a little bit. And from what I can read from the CEO, she successfully did it. Okay, let's get you back over here. We'll take a look at Hertz. There you go. Hertz a little bit lower, 10% on the day. This is a really herky-jerky stock. It's a tough one to, well, you can see. Look, it's like a freaking heartbeat monitor thing at the hospital. Anyway, stock down 10%. Carl Icahn had reduced his position. He owned about 35% of the company, reduced it down to 29%. That's a big adjustment when you're talking those numbers. And so, anyways, that stock was lower. Papa John's, you're going to see that in the news. Stock was higher by 5%. They settled their deal. They're going to kick out Papa John. Papa John's like, I'm cool with it. You got to replace me with someone that we both agree on as far as the board seat goes. They have a deadline to do that. So they got to agree on that. And in exchange, he's not going to sue them anymore. So the stock may be putting a little of that uncertainty behind us. Remember, investors don't like that. Uncertainty. We don't like that. So that part of their chapter of their life may be over. GameStop trading just near lows here. They're doing $300 million in a share buyback. And they sort of said, you know, we're still interested in selling. If anybody wants to buy GameStop, they're sort of throwing their flag out there saying, we're for sale. They keep trying to hint at this with no real takers. I missed something. Ross Stores, by the way, is going to buy back $2.5 billion worth of their stock over the next 2 years. So putting a deadline on it. Interesting. Okay, I think that's what I missed. You know how you make those, you forget things? Mad cow. All right, here we go. Aurora Cannabis. Stock was higher by about 12% today. So a lot of these companies, these pot stocks, are starting to get coverage. And you're going to see the headlines say things like, so-and-so initiated coverage. That just means that they didn't previously rate the stock. You know, they don't have an analyst covering the stock, and now they are. Well, Cowen, I believe it was Cowen, they initiated coverage. The comments there from them say that they've got a 20% market share in Canada, Aurora Cannabis, by the way. They've got 20% market share in Canada, and they're positioned to further increase that market share as well as increase in profitability. So if you're an investor, you know, what else could you ask for? It sounds good. They didn't rate it as a buy yet. That's not abnormal. They don't do that. But now you've got another one of these major analysts covering a pot stock there. I still feel like I'm missing something, man. I don't know. Anyways, that's all I have for you as far as stocks go, as far as I can remember. Political news, Michael Bloomberg and Hillary Clinton officially not going to be running for president. So should be interesting. A lot of new names on the Democratic side. Well, you know, a lot of names in the thrown in the ring right now. But two of the big names, Hillary Clinton and Michael Bloomberg, have officially said they're not running. We covered earnings for tomorrow. Oh, Livent. Who asked about this before? Somebody that watches here has asked about this a couple times. Livent, the symbol is LTHM. Livent Corporation is a brand new, somewhat new company. Recently went public. They're already going to be put into the S&P 600. They're replacing BRS in the S&P 600. That company's all but toast. So I thought that was interesting. A newer name there. Going into the S&P 600, new IPO. Oh, and in China news, that's what I forgot. Weibo reported earnings a little bit less than expected, down about 3.5%, and YY in the same space, they killed it, up about 13%. Tons of volume there. So if you follow the Chinese stocks, the YY beat on earnings, beat on revenue, looking really good. So that's that one. Michael, have you done a video on cap weighted index versus fundamental cap index? No, but I could do one on the straight S&P 500 versus an equal weight S&P 500. What a difference there. There's a big spread in there. If you weight each company equally, I could do one on that. That's something we've been studying here, or just, you know, looking at. Morningstar, looking at Tesla, it did break to lows there, right? So Tesla starting to sell off, a little extended, remains very much in a downtrend. Very much in a downtrend. You either want to, here, if you like this sort of thing, if you're a technical trader, where do you think it's going to bounce? So you can see a clear downtrend, right? Oops, series of equal highs there. If we can get that to stay, series of equal lows. I'll just put it here. So if you are looking to buy this thing, where do you think your price is going to be? Or where do you think people are going to be interested in buying it? Right around 260. So what you really hope for is that it kind of gives you a negative day or two, right? That could happen all in one day. Anything down in this area, we'll leave the lines there. Watch what happens. You'll see it might poke through a little bit, but you'll see sort of a little excitement from the technical traders once it gets there. So I don't know, just something interesting I figured I'd point out. Weibo, yeah, covered that one for you. Cool. I actually don't follow this one. CanTrust, CTST, I'm not sure. It looks strong. From a technical perspective, you hope it pulls back. You got a big downtrend there if you're following that one, and it just hit the top of that downtrend. So I would say no hurry. Mr. Sprinkles has got money to spend. I like that name. Mike, tonight I'm going to be recording a video on Lyft. We put together all the data we have. It's going to be a sort of geeky one, so I'm going to use the board back there and write it out. Things you need to know about Lyft, so look for that to be posted tomorrow. I just didn't want to do one of those like, oh, Lyft's going public. Yeah. I like to get into the details, so that one will be posted tomorrow. What you need to know about the Lyft IPO. And we're going to include some Uber data in there as well. Yep. Cool. Well, that's all I have for you. I will wrap it up there. I hope you enjoyed in some way. And if so, maybe you'll keep us in mind here at Jazz Wealth. Otherwise, it'd be great if you just hit the subscribe button. That'll help us out, make us look like we're somebody over here. Enjoy the rest of your day. And hey, how about another cup of coffee?
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.